Hi, everybody. It's Jack. I want to show you what is going on in the market. This is easier than me telling you what's going on in the market because you can see it. You know, a picture's worth 1,000 words. So what I want to talk about today and show you is how dangerous it can be to get into a stock that has gapped up. And a lot of them have since the election. In fact, the broad market has even gapped up. And I expect this to pull back and cool off. What we're looking at here is the SPY. It's an ETF that tracks the S&P 500. And here you see the S&P 500 found support right here at this intermediate term trend point. Then it gapped right here on the election, and it's gone higher this many days. 1, 2, 3, 4. Right, we're going into the 5th day. Now, anytime you get between 3 and 5 days of blue bar days, which is higher daily highs and higher daily lows, you're going to get a pullback. That's just how the market works. It's going to take a rest. This gap is going to also have to be filled in at some point, right? The market can't go without filling in that gap. Here was a gap here, and this is how long it took to fill in that gap, right? It's going to happen down the road. Same thing here. This gap is going to get filled in. This is also an abnormal amount of gains in a 5-day period. We had a little run here. That was an abnormal amount. That's your sell signal. Okay? That's the same thing there. Same thing right here. But as we go through these, you'll see that some of them have just become overextended. This is an example, one you wouldn't want to trade. See here again, this is abnormal. So Amazon is already starting to cool off after a 3-day extreme higher daily high and higher daily low. And that's creating a problem, is that, look at that gap. I mean, you just can't get into that trade right now, right? This stuff is going to have to pull back. So when you want to find a trend, this one looks pretty good, ATMU. You want one that has not really gapped up and gone too crazy. This is a crazy stock to trade, but it hasn't gapped up too much. AVGO, I'm long that one. American Express, that had a gap. Again, it's hard to find a good entry in a stock right now because of these gaps higher, and that gap won't hold. So we want to try to find something that hasn't gapped, something that's been a little smoother in its trend, and avoid things like right there. This is just a trading trap. So stay out of that. Try to find something that's been moving higher daily highs and higher daily lows that has not gapped up. So don't get involved in anything that's gapped because it's going to cool off and come back.